Hello, it's Adil bringing you a review of the US markets and why I think we've got a potential reversal coming here, folks. Basically, this is my argument for a reversal in the US markets. Okay, so I'm going to do a quick video. I'm just going to forget about fundamentals for now because there's a hell of a lot of noise out there. But in a nutshell, the reason why I'm bearish right now is because Miss Yellen's speech obviously didn't deliver what was expected or what the market expected. Basically, she's anti I won't say anti QE, but her comments have come across as basically attempting to pop a bubble. That's the way in which I can explain it. So Fed's Yellen oversight should focus on resiliency of big firms. Yellen sees enormous challenge in addressing shadow banking. Okay, so again, Yellen, we will try to communicate monetary policy in an understandable way to avoid surprises, but spillover is unavoidable. Again, what she's trying to explain there, if you read between the lines, Yellen says Fed trying to identify new threats. Again, if you read between the lines, what they're trying to do is they're trying to clamp down. They realise the market's obviously got too far ahead of itself, and that's why she's coming out with statements that are slightly negative and certainly need to cool or dampen the excitement and the euphoria in the market. If that generally tends to happen, then you will see that there will be risk coming off, the US dollar will strengthen, etc., etc. Now, given the economic data has been, ADP number came in stronger than expected. Obviously, that helps the dollar. Obviously, that strengthens the argument for tapering. And as we all know, once you start to taper, all these QE smackheads, QE crackheads, QE morphine shot idiots that keep buying the dip and forcing this market higher and short squeezing everybody out of their positions constantly into new highs and making everybody think the market's going to make a new high and the market is strong, etc., etc., etc. Obviously, they then go cold turkey and the market dives. Okay, that's basically for the fundamentals in a nutshell. Again, I can go on, I can argue for and against with regards to this market all day long. I've been trying to call a potential. I tried to call a top a few days ago. That didn't transpire. Last week, I think it was. That didn't transpire. I'm attempting to do it again. All we can do as traders is put our stop loss in. I mean, obviously, it's a fool's game to call a top, but as traders, we have to anticipate and forecast and use our hindsight and foresight in order to potentially call a reversal. If you can catch the reversals, then you're a very good trader. All the argument of individuals calling tops are idiots and the fools and this and that and the other. Yes, I agree. We go with the tape, wherever the flow states we go. Don't get me wrong, last week was a poor week for me. The week before was a poor week for me. So it's all part and parcel of trading. So this week so far, plus 60, plus 70, not a fantastic week, not the way in which I should be trading, and I can certainly trade better than this, but that's the market. If the market's constantly going vertical and knocking out all the shorts and ignoring all resistance zones, as a trader, that's all your bread and butter is, support and resistance. Okay, and obviously you can adhere to your fundamentals. For example, Shanghai was flat overnight, Nikkei was barely up. Okay, even though the US markets are euphoric. So I'd take all that with a pinch of salt. Okay, adding the fact that the euro still remains afloat at 1.365, even going into a Draghi meeting. So obviously people don't believe that this chap is going to deliver the QE carrot that we're all trying to bite on. And given the fact that sterling obviously is at 1.715, again hurting exports. So even though the economic data was stronger than expected in the FTSE's defence, but the US markets are now into resistance, which means that the FTSE will come into resistance as well. So these are all factors that we have to take into account using intermarket analysis. Okay, now going on to the technicals, I think I waffled enough there with regards to fundamentals, even though I did say it was noise. Okay, so let's have a look here. Okay, so let's go to our daily charts quickly. I don't want to make a long video, I want to keep it short and brief. Okay, so basically the S&P is not giving you anything at all. Innocent until proven guilty, higher we go. Okay, the only argument you can potentially make is you can use this trend line here, connect this across, and obviously we're in the upper level of resistance. Okay, and then obviously we can connect this across here, and you're looking at potential upper channel resistance. Obviously markets into resistance. That's the only thing you can argue there. But again, that's just one trend line. That's not sufficient enough to make a trade. Okay. Now let's have a look at the lead. Well, the laggard is the S&P. What's the leader telling you? The leader telling you with regards to the S&P, I always follow the IWM. IWM, as we all know, is Russell 2000, and that's telling me resistance because we put in a topping tail yesterday. We did make a high, not convincing from my perspective. It's been lagging ever since, and it left an unfilled gap behind. So that gap fill should close, and that should cause the S&P to move lower, given the fact that it's an upper channel resistance, and down we go. Okay, I think that's pretty clear. Only scenario potentially could hear two scenarios. We come back, we retest a breakout, then we bounce, or we fail and it's a fake out, down we go, boom, and the economic numbers, whatever argument, whatever spin you can spin, whatever way in which you want to spin it. Basically, you can argue the economic or the fried numbers that come out this week in terms of employment, etc. If they're stronger numbers, then obviously that's stronger economic growth, stronger currency, stock markets rally. Nobody gives a flying monkeys about tapering, okay? Or alternatively, the economic number comes out much stronger than expected. The market's obviously overbought. We need an argument. Stock market sells off. Then they'll blame, oh, it's tapering. Oh, tapering phase. Economic data is better than expected. The morphine's going to come. The morphine drip is going to be taken away from the stock market. And all of a sudden now, they'll argue that, oh, this market's going down because of tapering phase. Load of horse. Okay, I'm not going to say the next second thing. Okay, so with regards to the market, let's just see what. Let's just try and determine to what it is. It is severely distorted right now. Severely, manipulated. Severely, shall we say, disorientated. And it's very, very hard to read. I'll be the first to confess, this market is gibberish right now. It's very, very hard to read. Very, very hard to read. The rules of the game are being constantly rewritten. Okay, before you had bad news equals good news equal bad news. Now tapering is coming to effect, and it's supposed to be the opposite way around, and the opposite way around isn't working either. So scratch your head. Okay, very, very confusing. Anybody who states that they know what they're doing, then the only scenario that I can see, the only strategy that I can see that they're applying is they're buying every dip there is and closing their eyes. Okay, BTFD, buy the effing dip, as they always say. Okay, any monkey can do that. You don't need to be intelligent. You don't even need to be a trader. Hell, you don't even need to have a trading account. Just tell your broker and tell him, you be a monkey for me and you buy every dip there is, because central banks have got your back. They haven't got your back because they're tapering. Okay, so arguments for and against. Again, you can argue on this side, you can argue on that side. So let's just focus on technicals and intermarket analysis and see what that's telling us. Intermarket analysis is telling me that the Aussies under pressure, the Kiwis under pressure overnight, obviously with the RBA. The Aussies failed to rally and obviously sustain its rally. Chinese data has failed to cause the Shanghai to rally. The Nikkei with the third arrows failed to rally. No more QE from Japan as well with regards to that. Obviously Japanese yen pairs under pressure, even with stronger data today. USD JPY really hasn't started to lift off, along with EJ. Again, that's signifying resistance, signifying weakness to me. So my currency market is telling me weakness. My indices market is now showing me weakness, which I'll clarify and identify to you shortly. And then my commodities market, obviously the oil price has obviously come off now. It's at 106 now. It's gone down to 105 and falling. Okay, copper certainly is into resistance. Gold certainly remains afloat. That's only due to geopolitics that are in the background. So that really can't be counted for in terms of commodities. Okay, if anything, there's geopolitics still ongoing, so that's risk off. Given the Russian-Ukraine obviously ceasefires come to an end. With regards to, you've got situation in Iraq with regards to ISIS playing Call of Duty. That's what they think, any of the idiots on PS3. So these are all factors that are at play. So topping tail on the Russell. So I need to stop waffling because I can talk and talk and talk. Okay, so that's basically the argument there. Topping tail, unfilled gap, retesting the breakout level. Therefore down we go. Therefore down we go the S&P. Therefore down we go on global markets. Okay, the Nasdaq. The biggest argument for the Nasdaq top, and this is basically pretty conclusive from my opinion, and certainly is into resistance, is your biotechs. Okay, so if you look at your biotech stock, biotech index, okay, inverted head and shoulders, what was the target? It was 265. Well, where have we hit? We've hit 265. What does that mean? Resistance. What does that mean? Reversal. What does that mean? Top in the Nasdaq. Okay, that's basically what it means. We've hit 265, inverted head and shoulders, short squeeze over. Everybody who wants to bail out on their longs, this is the best time and opportunity to do so. Okay, especially with economic data being good. They always say top of a market is generally when everybody's euphoric, everybody's talking about Dow 17,000, etc, etc, etc. Okay, I'm not going to go into fundamentals because again, there's a lot of noise there, folks. This is why it's, for me as a trader who's into market analysis, that's observing in excess of 50 to 60 variables at any one time, it's very, very hard for me to read right now because everything's disorientated. This is very confusing. Okay, and that's why I've had last 2 weeks have been very poor for my, especially given my record anyway. Especially after 10 years, never had a losing month. Yes, I've had losing weeks. Last 2 weeks are testimony to that, but not a losing month. Because just like any football player or a cricket player, etc. Cricket, probably only get one chance, but if you're a bowler, you get several. Football, I mean, if you have a poor performance for the first 10 minutes, you can always regain the next 80 minutes, okay? And you can always make amends and make a do. So with regards to trading, same thing. If you have one bad week, you can always make up for it the next week, because you can't read that week. You learn why you can't read that week. You go back, you reanalyze, and you reassess, and then you have a new strategy. Not a new strategy as such, but you know how to read the market, because the variables are slightly different. So for example, one week it could be EJ, UJ leading the market. The next week it could be totally ignoring EJ, UJ. It could be observing Aussie USD and Kiwi dollar. The next week it could be observing the inverse relationship between the euro and the DAX. Okay, so the markets are constantly changing and evolving, and it's up to you to change and evolve. Okay, that's why a lot of these EAs out there, okay, fail, because the markets are constantly adapting, and you must adapt accordingly. Okay, learn to adapt. Okay, otherwise, you know, fortunately, they'll adapt to your trading account. Okay, okay. So with regards to the Nasdaq, okay, again, inverted head and shoulders pattern has been hit. Therefore, short squeeze is over. Therefore, profit taking. Therefore, topping the Nasdaq. Okay. Let's have a look at the semicons just to confirm that and see exactly what's happening with regards to that. Okay, Nasdaq semiconductors. I'm just confirming here, folks. I am short the Nasdaq and I'm short the FTSE with my subscribers on the live analysis service. Okay, so there's nothing really from the semiconductors. Okay, this is innocent until proven guilty. This is a breakout. There's no way I can argue that the semiconductors are going to reverse it. Okay, very, very hard for me to do so, other than the fact that we've got an unfilled gap. That's the only thing that could obviously force it lower. Unfilled gap here on the semicons, unfilled gap here. Okay, so two unfilled gaps. Again, they are usually catalysts for the gap to close. There's nothing on the daily chart that I can argue for the market to obviously fall and go in the opposite direction. Okay, and all we have here is double top. Okay, there we go. Yeah, double top. Now we drop. Okay, intraday double top. That's the only argument there. In a smaller time frame, I can't find anything in the larger time frame, and that's me being honest. Okay, I can try and argue. You know, you potentially use this resistance level here, and you've got upper channel resistance. Again, that's a very weak argument. Okay, from my perspective, daily chart, you can't really argue there from a technical perspective that we've got a reversal. Okay, now let's have a look at the Nasdaq, see if what that's telling us, because that's the chief. Very important to observe the chief. Okay, Nasdaq itself, as you can see, intraday, you got triple top resistance, quadruple top, call it what you want. Flat tops equal market drops, and down we go. What do you notice here? Okay, surprise, surprise, unfilled gap. Unfilled gap, what does that mean? Market needs to close it. Okay, you've got 200 MA, unfilled gap, boom, shakalaka, down we go. Okay, so that's basically what's happening with regards to that. Okay, unfilled gap, as you can see in the daily chart. Certainly seems to be exhaustion up here with the doji candle, and like I said, all gaps need to be filled. So obviously 3850 potentially next target to fill the gap. Okay, folks, that's basically the argument there. Okay, now let's have a look at the Dow before I finish this off, because this video is getting too long now. Again, triple top. What does that mean? Triple top, market drop. Okay, flat tops, market drops. Okay, so that's basically where we are at the moment. So horizontal resistance, market's failing to make a new high. That's the Dow Jones Industrial Average. Let's have a look at the Dow Transports. Dow Transports, where art thou? Where art thou? Dow Transports. Okay, Dow Transports again, double top. Okay, double top, market drop. That's exactly what we're looking at. So what does that mean? Market reversal, US market top. Down we go. Okay, and that's basically it, folks, in a nutshell. Get ready for further downside. Wax on, wax off. Risk on, risk off. Goodbye now. Oh yes, one more thing. If you want access to my trades, my trade alerts, a live analysis, live commentary, this is just a video that I'm doing at the moment. I provide this real time with text messages, with the emails, with analysis, etc, etc, etc. Go to my website, inter-market-analysis.com. If you click on live analysis service, there's a video there explaining how I operate. There's a video explaining how basically how I enter, exit, how I send emails. And there's obviously testimony as well to existing traders, several traders that have taken the live analysis service, and what their opinions of that are. So all you need to do is find me an email. It's daytrader@inter-market-analysis.com. Send me email, send me your WhatsApp details, mobile number, and I'll add you to the group for a 1 week trial if you wanted to try it out, or alternatively if you want to join. I usually charge £50 a month. And like I said, I've been doing this for 10 years, and I average around 200 points a week, around 1,000 points a month. Again, take the trial, see it for yourself, observe for yourself, and witness it for yourself. Okay, folks, I think that's enough. Risk on, risk off, wax on, wax off. Adios.